Good afternoon, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, a must-read pre-market for any trader or investor. When I start my day, I'm really triangulating a series of data points vis-a-vis my four pillars of rational trading, and doing that in pursuit of identifying an arbitrage opportunity that I can trade on a macro basis each and every day in the money fortress. Now, today, I started my day looking at the economic calendar, and it reminded me, which is why I'm doing the video today, of the importance of the economic calendar and how valuable it can be in giving traders clues as to what is about to transpire in the coming trading day. So today, if you notice, Wednesday, May 14th, absolutely nothing was happening. There was no data to speak of. We had Federal Reserve speeches. It looks like three of them today. But let's face it, folks, with Jay Powell at the helm, the Federal Reserve right now is very much on the back burner of what you should be paying attention to. So, knowing that, and I'm not paying attention to these Federal Reserve speakers, I know exactly what I'm getting from the Federal Reserve. I'm basically looking at a calendar devoid of any significant data that could upset the apple cart in terms of taking the market at least on a volatile path up or down. Now, I'm not using the economic calendar to determine up or down. I'm just using it as a tool really to ascertain volatility. Now, I knew it was going to be a slow day today, and when all was said and done, the major market indexes were mixed. The Dow sold off at the close, but was really only down, fractionally throughout most of the day. And the NASDAQ was trading higher on news of big technology transactions taking place in the Middle East. So back to the economic calendar, when I see a calendar that doesn't have any data, I'm really looking at a low volatility trading day. It had me this close to utilizing leverage today because when volatility is low, I really like to ramp up the leverage in my trading. And that's just another tip for anybody that's interested in how you can really get an edge in the market. And volatility, yes, there are you need to make sure you have the risk tolerance to handle leverage, but it's leverage isn't the boogeyman that a lot of folks make it, and it can be when used appropriately, can be a great way to turbocharge your portfolio. So one signal you should look for when deploying volatility is the economic calendar going to spike volatility? Because a spike in volatility, if you get the direction wrong and you're utilizing leverage, you're going to get whacked. So again, this absence of data today is a real clue as to how the overall market is going to trade. Now, as it turns out, just full transparency, that was only one piece of the analysis. Then once I determined I wanted to use leverage, that I knew it was going to be a slow day, then I had to decide the direction. And at the open, I was really looking at futures pointing to a much higher open on the NASDAQ, taking away the arbitrage opportunity there. And so I went back to kind of the overall observation that volatility was going to be low. So I ended up fading volatility at the open, and that ended up being a trade that drifted lower throughout the day. And we actually got hit on that trade. So, like poker, I'm really not looking at the outcome. I'm trying to put the preponderance of odds in our favor when we're trading. And I just know that over the course of many trades, yes, I'm going to lose some trades like I did today, but ultimately I'm going to come out way ahead of the game. And when I pick my spots, like today could have been one of those spots to utilize leverage, then that's where you really can turbocharge your portfolio and achieve what is one of the mandates in the Money Fortress, which is generating significant outperformance. That's all I have for today's video, folks. This is JD. As always, I'll be back tomorrow with another video. Take care, everybody. Have a great day, and we'll see you next time.